Hello, welcome to another session of an in-depth into the market with legacy education. We'll be looking on the market or possible moves with respect to the market from tomorrow the 19th right up to the 23rd of August 2024. I hope that you did enjoy our last session and you made some profits from it. If you enjoy what we do, don't forget to subscribe to our channel, like our videos, and comment on them. So we'll dive straight to looking at DXY. First, sorry, let's look at the key fundamentals we should be looking at as far as this week is concerned. So tomorrow, Monday, from 12:15, we have an FOMC member will be speaking, which of course is medium impact news. We are looking specifically at the news items that will definitely affect currency pairs we are interested in. Then we have on Tuesday we have the CPI, Canadian CPI, and on the Wednesday at 7 p.m. we still have a high impact news. FOMC members speak. On Thursday we'll have the French flash manufacturing PMI on same Thursday at 8:30 a.m. We'll have the German flash manufacturing PMI, and we'll definitely be having flash manufacturing PMI for the Great Britain pound on same Thursday at 9:30. Then on the same Thursday, 1:30, we're having unemployment claims. We'll have flash manufacturing PMI for the United States dollar. These are all fundamentals that you should take into consideration as you're trading the week. On Friday, we'll have core retail sales for the Canadian dollar at 1:30 p.m. and at 3 p.m. we'll have Powell, the Federal Reserve Chair, will be speaking, giving data about inflation and tax cuts or tax maintenance as far as the United States dollar is concerned. And at 8 p.m. on Friday, BOE Governor Bailey will be speaking with respect to the Great Britain pound. So these are the high impact news we should be looking at. From there, we should look straight at DXY. So on our daily time frame, we can unanimously agree that DXY is actually on downtrend, though it is at a key level. We have a high possibility that the market will break the level. We can see a further drop from where the XY is now. If you notice, right from June 24th, the XY has been creating a series of lower lows and higher lows and has been breaking structures to the downside. And on Friday, the XY actually closed with an engulfment bar, telling us that the market still has a high potential to sell. It's true that the market will definitely open with a gap, but when the market opens with a gap, just for the fact that the market has been creating a series of lower lows and higher lows, and we have an engulfment on Friday, it is telling us that the market has a higher potential to fall. So what should be our expectation as the markets open? We should be expecting to see the market pulls down to this demand zone. The market should pull down to this demand zone. So definitely, as the market opens tomorrow, we can see a possibility whereby the market obviously can retrace back a bit and then falls down right to this level within this week ahead. So this week ahead, we are expecting to see more of a bearish DXY. If we are seeing more of a bearish DXY, obviously it shows that as far as the week is concerned, we should be looking more at the possibilities of buying currency pairs that doesn't move in correlation with the XY. For example, if the XY is going down, we should be looking at the possibility of buying GBPUSD or EURUSD. But you should be so keen ensuring that you apply your trading strategy to make sure you enter the right position. For the fact that the XY has shown a selling bias, it doesn't mean that you should just jump into the market and you are buying GBPUSD or EURUSD. You should wait for appropriate reversals and then you enter at key zones. But it is more advisable that if the XY keeps on selling right down to this zone, you should keep on looking for buy opportunities on GBP, USD, and Euro USD. So that is the first scenario. For now, I really don't think that there is a high possibility, or there is much of a possibility that the market will retrace from this level. Though somebody might look at this base, that the market is reacting to this base at this level, but now we are already seeing an engulfment. The momentum of this last daily candle, that is a candle of Friday, is telling us obviously that there is a high probability that the market will break these zones. So there is a possibility that the market might not respect this base. But if in case the market respects the base, then we should we should wait first till the market completely breaks the highs of the previous higher low that it has created. So if in case the market retraces from here, we should be expecting the market to completely break this high for us to be sure that the market will definitely push up. If the market fails to break this high, then we are still in a downtrend, and we'll definitely see the market coming down to the level of 101.222. So that is our expectation with DXY. Then on to GBPUSD. I think you definitely see that we are in track with our forecast of last week. We estimated that it was going to break the wage, and of course, and it was going to buy more. That's exactly what we are seeing. So in confluence with our DXY, it has broken it. What we are expecting is to see that the market push further right up to the demand zone. Now, the only demand zone we are having with GBPUSD is right up at the level of 1.347. That's our expectation. So we want to see the market in the week ahead pushing up, or it keeps up with this momentum right up to the level of 1.347. So what can possibly be our priority in the market is that we should be looking at buy entries. Nevertheless, the market can definitely react to the base at the level of 1.30015 and maybe fall down a bit, but our expectation is that the market will definitely clear off all the liquidity that is sitting at this zone. The market will clear off the liquidity, then fill the gap slightly above the zone and enter into our zone of 1.3471. So that's our expectation with it. So what should we where should we be expecting and entering as far as this is concerned? So when the markets are open, the first thing we should be looking at is to see maybe a possible gap to the downside. Maybe the market can further sell right down to the level of 1.28542. So if the market gets to this level, of course, we are seeing a clear demand zone there. We are safe to enter a buy entry, hoping that we are taking the unmitigated demand at 1.3471 as our take profit. So this should be what we should be expecting as far as GBPUSD is concerned with the market this week. Or there is a possibility that the market might not get right down to the zone of 1.285. We can check on lower time frames to see if we have another demand zone before the market actually gets to that level. If to say that we are able to see another demand zone, then we should be expecting an entry from the demand zone. But before you enter that level, you should be waiting to see that the market actually rejects the zone. But the most favorite zone is 1.2850. So you can actually, or you can conveniently enter the market. Apart from that, on the 1 hour time frame, you will be seeing that the market has a demand zone around 1.28938. So the market can possibly retrace back to the zone at the opening of the market. So if in case the market pushes down to the zone of 1.29 or between 1.29 and 1.288, then you can possibly take a buy from there. So our expectations tomorrow as the market opens is to see a little bit drop down to create equilibrium and a push up. And if you look at it on the 1 hour time frame, you will see that the market move up with a lot of imbalances that needs to be filled before pushing up. So we should be expecting the market to possibly get back to this zone, or it moves down to the 4 hours demand zone before we place a buy. But our overall bias as far as GBP USD is concerned is to get buy positions till when the market gets to the level of 1.3471. I think we are together on this. Then obviously, Euro USD moves in confluence with GBP USD. Euro USD moves in confluence with GBP USD. So on the 4 hours time frame, we'll notice that Euro USD is already very close to a demand zone. But now it has initially broken a key demand level, a key supply level, created a new higher high, then retraced back to a demand zone before pushing up. So our expectation with Euro USD is to see that it pushes up, and then fill this zone we are having here, then moves to the demand zone we have at 1.1105. So our expectation with Euro USD is to see it moving right up to this zone in this coming week. So we are safe to say that we can look for buy entrings as far as Euro USD has not gotten to this zone. So our expectation with Euro USD is to see that it moves further. It can retrace a bit, but we want to see it move into this zone before we look for a possibility to further enter, or maybe the dollar index will keep on falling and we keep on looking for buy opportunities. So this is this for Euro USD. There is still another possibility that at the open of the market can retrace back a bit, then comes back to this demand zone before pushing up, which is more safer. So this is an ideal and a more conservative entry for all traders this week. So what you should be looking at for Euro USD and GBP USD is to see that there is a bit of a retracement to a possible demand zone, and you see a rejection from the zone, or maybe you see any trade confirmation and you enter a buy position, hoping that DXY will keep on selling. If to say that you don't see a confirmation in the market, you should avoid entering the market. Together, let's make the market blue this week. Good luck as we navigate through the market. Thank you very much.